Coming up on Market to Market, cattle news tied to kitchen table economics come home in a roundtable discussion of the economic state of affairs. Commodity and economic analysis with Chris Robinson and Ernie Goss next.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
This is the Friday, November 28 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The headlines after the turkey is sent home with your uncle and cousins usually revolve around shopping. Just before Thanksgiving, the government released retail sales from September, again delayed because of the shutdown. Retailers posted their smallest gain in 4 months with a 0.2% rise in sales. This leaves few strong signals of what the holiday season will bring to the nation's cash registers. The costs for energy and tariffs were passed on to consumers in the form of higher prices in September. The Producer Price Index was up 0.3%. The year-over-year figure was up 2.7%, still adding fuel to the already burning inflation fire. What has transpired in the past year is part of the larger discussion this week. Ernie Goss is the McAllister Chair and Professor of Economics at Creighton University, based in Omaha, Nebraska. And Chris Robinson is founder of Robinson Ag Marketing and a regular market analyst on the program. We'll get their insight in a moment on the economy here. But first, a programming note. We are recording this week's show on Tuesday ahead of the Thanksgiving holiday. So in the markets, much of the movement so far was muted as traders made their way to the sidelines and a reduced trading schedule. For the week, the nearby wheat contract stayed flat for the third consecutive week, while the March corn contract added a penny. The market waited for China buying to resume in the soy complex. The January soybean contract was even, while January meal added $1.20 per ton. March cotton expanded by 40 cents per hundredweight. Over in the dairy parlor, December Class 3 milk futures weakened 21 cents. The livestock market was mixed. February cattle fell 7.45, January feeders cut 7.15, and the February lean hog contract added $1.30. In the currency markets, U.S. dollar index was weaker by 49 ticks. January crude oil lost 14 cents per barrel. COMEX gold added 53.40 per ounce. And the Goldman Sachs commodity index was down more than 5 points to settle at 539.60. Now, to lend us their insight on the commodity and economic picture, Chris Robinson, Ernie Goss. Good to see you both.
Good to be here.
Ernie, of all the weeks to have you booked, big story develops out of Nebraska that's going to have major reverberations in the food we eat, in the price we get, and absolutely in the economics of the state of Nebraska. How big is this announcement by Tyson to close this plant? The notes that I have is they push through 1.8 million head a year, 5% of the capacity, and 95% of Nebraska's cattle could go through there on numbers if they all went through there. Accurate. What's that going to mean?
Well, you've said it better than I. That's it. A big deal. And is that plan accounted for about 5% of U.S. beef production output. And that, of course, is huge. And if you take on their plant in Texas, the one they're downshifting a bit, the two combined is 7 to 8% cut by Tyson. Now, Tyson has lost value, and as investors see it, went from $100 a share 3.5 years ago to about $57 a share, which of course is about 40 to 45% reduction. So something's going wrong with Tyson, and it's not good, and it's spilling over. Part of it's coming from the beef industry itself, but also from Tyson, what they've not done and not done.
Well, what they've not done is had a lot of animals come through. When we're talking about low herd numbers, it's been an industry thing. The prices, though, aren't going down. The president's getting involved. What's going to give first? I mean, is this the first sign of more to come, or is this as bad as it's going to get for the beef industry, the closing of this plant?
Well, I think we're going to see better out to come in 2026. But anytime you get political meddling, that's not good. So if we have politics enter, it could get worse than what we're seeing right now. Right about 60 miles down the road from Lexington is another plant that's just opened, Sustainable Beef, and my team did an analysis of that plant. And we're talking about a plant that's much more automated, much more environmentally friendly, so doing some of the things that the new plants are doing. One of the problems with this plant has been around since 1990. It went from, the population of that town, Lexington, went from about 6,300 to 11,500. So you can imagine we're losing 3,200 jobs, what it's going to do to that community. But what does it do to the industry is what we're talking about here, I guess.
Is part of this story the labor issue that we're just not talking about?
That's some of the issue. That's certainly an issue. I think the bigger issue is just the cattle supply. And of course, with the drought conditions that we had, the screwworm issue going from Mexican cattle going across the border, not going across the border.
So Chris, what's the market reaction? We saw the market reaction Monday was limit down lower. Tuesday, there was this expectation that we were going to do the same thing, did not, kind of cut some of those losses down. Later in the week, next week, what's the long-term impact of losing 5% capacity?
Well, I think it's going to be, are there going to be other plants that are going to be closing down? Because it's at the end of the day, it's a business decision, and this has been brewing for a while. So we'll see if we get more closings, because we have the herd's too small. You have to have some motivation for ranchers to hold back the mama cows. There's been all kind of talk about were they gonna there were rumors that they were going to pay people because you have to rebuild the herd. It's not like when you had the problems with chickens or eggs, it can come back very quickly, or even with hogs, it comes back quickly. So that's the problem. And you talked about prices. We had an all-time high, and now we're back to basically trading $2 fat cattle, which years ago would have been crazy. And we get $3 feeder cattle, which years ago would have been crazy. We went from 380, we had a 10-month rally where we rallied 111 points in feeders. And then in 5 weeks, we lost 75% of that. So, and it all started when the talk was, well, we're gonna bring up cheaper beef from Argentina. And that's all it took was that. So that emotion drove it more than anything. And this is why commodity trading is so difficult, because there are the facts, there's a side of the herd, there's the supply and demand, and then there's the emotion. And when the exit doors get small, when everybody wants to get out. So we've done a lot of damage. We've basically given back 75 to 80% of the rally that we had in the last year. So we've hit that reset button. The question is this going to be like 2008 to 14, we had record high prices, and then it took 2 years for prices to come back down. So was this the first shot across the bow? We'll have to wait and see. But I think that we're going to have to watch and see if there are more plant closings. And but definitely, the market feels oversold now, but doesn't mean it can't go lower.
So, Dr. Goss, I'm going to guess in your surveyed states, when they hear talk like that, it changes their sentiment. Already facing higher inflation, higher interest rate. Yes, we've had a little relaxation of that. What's the outlook here in your states?
Not good, Paul. This, of course, is a survey of bank CEOs in rural areas of 10 states. The negatives are getting less negative, I can put it that way. But what we're talking about, the U.S. economy and the regional economy, we're talking about, take a man with his hand in the fireplace and his hand in the refrigerator. On average, he's doing okay. That's what we're talking about for the U.S. economy, the regional economy. The rural areas is the refrigerator. The other side, it's not a fireplace, it's warmer though. So what we're doing on average, the U.S. economy, the regional economy is doing okay, but okay is not good enough. We're looking at, for example, the Atlanta Fed says 4.1% GDP growth in Q3. Now that's a lot to do with data centers. Data center expansion, that's investment. But unfortunately for the consumer out there, he or she can't eat a data center. I mean, that's investment, it's long-term. How much does that add to our welfare, our economic welfare? And that's the real issue right now. And back to what it's doing in the rural economy, those of our survey participants who are in cattle country say prices are good and strong, and That's a good point. But in the grain side, not much at all. We're talking about real issues there.
When inflation gets talked about at the election time, you hope that something happens in the months that follow. We haven't seen that. There's arguments of, oh no, prices are lower, but when you report producer price index, consumer price index, those numbers keep going up. What's the real story?
They're going up. That's the real story, as you had it, and we economists. And the Fed is caught between that hot and cold as well. And what they need to do, in my judgment, is reduce interest rates by 0.25% on December the 30th. That will bring the prime interest rate down to 6 3/4. Okay, right now, farm equipment sales in these communities out there, the rural communities, not well at all, and that spills over into the broader economy, particularly in Iowa. And that 0.25% it's not going to turn sales around, but it's not going to hurt. It will be helpful, and that's what we need to see.
I believe in your survey last week, land values, 58% of your surveyants said land values are going to likely fall by 3% next year. Why do you say that?
Well, it's 3 to 4% is going to be the outlook. Well, the rural economy is just not strong. We're talking about, again, look at corn prices, look at wheat prices, look at soybean prices. Now, a lot will depend on what happens, unfortunately, at the D.C. level. What about Argentina beef coming in? I mean, there's a heck of a lot of resistance to that, and there is a primary. There are a few years from now, but nonetheless, Iowa's the first on the Republican side anyway. So there are political issues, and we need to see higher prices. But at the same time, you're talking about, say, 20% of overall farmers, according to the bank CEOs, are below break even. They're in negative territory. Now that includes the beef persons, individual farmers, ranchers, and the grain. Grain's much higher underwater.
Let's talk about those prices in grain. I want to look at wheat for a minute, Chris. 3 weeks in a row of not moving. And we have this target of ending Ukraine-Russia war that might give some stability to rising the wheat price. Why the movement sideways so much?
Well, we have a tremendous oversupply of wheat. We have the most expensive wheat on the planet, first of all. And lastly, we just came off, in October, November, we were at 5-year lows. So we've had this 3-year collapse, really. You go back to look at the long-term charts. I do a lot of charts, probably too many charts. But when we went from really extensively higher prices because of COVID, because of inflation, you mentioned inflation. If inflation really comes back, that might be one thing that would bring up the price of all commodities. So we'll see if that happens. That's what they teach you in Econ 101. We'll see if that happens. But we're coming out 5-year lows in wheat. There's a lot of wheat out there. The Soviets and the rest of the world produces more wheat. Every time you turn around, that's a bigger crop than we thought. So you've got that stuff weighing on it, right? We did have a 50-cent rally, but it was short-lived. We had a rally also in corn, about a 50-cent rally, was short-lived. The most explosive rally we had was because of the idea that the Chinese were really going to come back and buy our soybeans. Promises were made. They were going to buy 12 million metric tons. They've taken about 2, maybe a little bit less than 2 so far. But the market, we rallied $1.50 in a month, that's the best rally we've had. We were at 18-month highs in soybeans. We're still relatively high, but we've given some of that back. So I think for the farm economy to get going again, we've got to get that lead back. We've got to get, okay, we've got this demand, especially. And people talk about China and corn. That's not really where the demand is. The demand for China is soybeans. And I think a rising soybean market will help pull up corn and wheat with it. That's what I'm hoping for.
Well, let's stick with soybeans. I'm going to get to you in a moment on a soybean question here, Ernie, especially with China. But Chris, on this $11 mark, are you calling up, making some orders right now? Are you placing some sales?
When we rallied $1.50 in 5 weeks, we're basically just on speculation that the Chinese were going to come back. And to see that they actually really haven't made those buys yet, they're holding back. They're keeping their hands like this because they're going to wait and see, are the tariffs going to be ruled legally? And also what's happening with this whole issue with Taiwan and Japan. That came out today where it's taken up because if they make a promise, when they have the meeting in South Korea, it's a memorandum of understanding, right? And then what they can say is, well, yes, we'll take a look at that. But the other problem is the grain coming out of South America is so much cheaper than here. So if you have a choice to buy up here or down there, they may say, yeah, we'll look at your market, but we're going to buy the cheaper market. So that's the problem. That's the last problem. We've had a big supply coming out of South America. They're going to plant more acres right now. South America sees an opportunity to take away more world share from the U.S. farmers. So that's really the issue there. We've got kind of the perfect storm of bearishness. So hopefully we'll get at least, maybe $11 beans are going to be our worst price for the year next year. I hope so. If you look at November 2026 beans, we're at, I think 11.18 is where we settled today. A month ago we were worried about sub $10. So I think you take advantage of it, make sure you know what your break evens are, and we'll hopefully get some sort of a recovery, next year.
What he just said gives you, I've been asking all these negative questions, Ernie.
Yeah.
Let's go positive. What gives you the most positive?
I'm an economist. We don't go positive.
Oh, I thought you were out of hands when you were an economist. Sorry.
That's right. But one thing we haven't discussed much at all is the cost. On the cost side, it's not just prices are low, costs are high. In other words, we've talked about, again, data centers. Now, what does that have to do with agriculture? A lot to do with natural gas prices, pushing up natural gas prices, electricity prices, and of course, those are fundamental to the farm sector, as it is to the ranching and also those of us in the suburbs as well, in the cities. So there's real concern out there about inflation, and the Fed I expect a rate cut on December the 10th, but that may be the last one for some time because the inflation numbers are still too high. The goal, of course, is 2%. Well, we're now about 3%. If you talked earlier about the retail sales, 0.2%, and everybody says, wow, it's great. No, it's not good. Multiply that by 12, we know what that is. That's less than the inflation rate. In other words, we're not getting retail sales. What we're seeing is what's called the K-shaped economy. Now, I wish I'd invented that. I didn't. But the upward part, those individuals, those families, those businesses, even the businesses are doing well. The other side, the other part of that down, and that's where we're seeing the real problems.
Ernie, I think the first time I talked to you back in like 2009, 2010, you were talking about that. Is that giving you flashback? Are we in a flashback to that time and place?
We're potentially there. In other words, that was the great financial crisis, the GFC, so-called. Yes, we're not there, but the housing sector now, separate from the ag side we're talking about today, the housing sector is looking very problematic. And we talk about how much consumers they're spending this holiday season. Where is buy now, pay later? Buy now and not pay later. I mean, there are some real issues there. I mean, stretching from the federal government at $38 trillion debt all the way down to college students who aren't paying back former college students not paying back their loans. I mean, we got some debt problems. I hate to be focusing so much on the negatives, but somehow as what Churchill, I think, once said, we try everything and we finally get to the right solution, and we'll get there. But political meddling does not help, though. I'm concerned about political meddling.
Well, it's a follow-up to what Chris said about China and soybeans. That was a big story on this program and anybody that trades commodities. What's the rural Main Street concern about our back and forth and political discussions with China?
Well, most of the farmers, at least as reported by the bankers, are positive about the tariffs and trade. Now, I think and I get asked, why is that? How could they be? Well, I think they believe, at least in my judgment, they believe that the president is negotiating, and that's how you negotiate. You don't negotiate like an economist. Economist comes in and tells you, well, if you'll just give me this, I'm okay. No, that's not how he negotiates. He's a negotiator. He wrote a book on it. Ernie Goss did not. So I think it's getting iffy there. I mean support for tariffs. I mean, we've seen what happened with China. That was a huge loss. And my concern is once you lose a customer, that's the U.S. customer, and you go to Brazil, do you then come back to the U.S.? I don't care what kind of deal you cut out there in Beijing. is it gonna work? Is it gonna happen?
All right, Chris, when your phone rings on Monday morning to hear what Ernie just said, what are you going to advise them? Is this a hold market, a sell market? Because I know he said the worst is probably behind us, but it doesn't sound real positive.
Well, so far we have no weather issues in South America. So if you're looking for something that's going to help rally things, the quickest thing to clean all this up would be to chew through the supply we have. We have to wait because of the shutdown. We've got to wait till January to get. It's going to be a gigantic data dump to find out exactly what the numbers are. There's arguments about what the yield was, what this was. Informer already came out with their acres for next year. We're still going to plant a lot of corn acres, north of 90 million. We're going to plant less, I think 4 million less corn acres, and I think 3 million less soybean acres. But we're still going to plant a lot. So that's going to be, and the decision's going to be made. Well, do I plant $11 beans? Or do I plant 425 or 430 corn? I mean, we had new crop corn hit almost 470, 475. Now the highest price we had all year for 2025 corn was 479 and 3/4. Most producers out there, and they need $5. Unless there's some magical way where you can cut the input prices. You were talking about the K economy, the K. It doesn't matter, the inputs are there. When they go to buy their seed and their inputs and their phosphate and everything they're going to do, that's still expensive. So it comes down to a math problem, and I think that like everything else, I mean, people will keep going as long as they can, but when they can't, that'll be the issue. So defend what you can. Make sure you know what your break even is. I think a lot of guys, you need to sit down with your accountant and know, because there's an old expression that I didn't invent it either, but nobody needs practice farming, right? It's a business at the end of the day. And if it costs you $5 to plant something and you sell it for $4.99, you can't make it up in volume,
Correct. As we look at a couple of these other things, cotton continues 5-year lows, another one of those exports that we could use help on from somewhere. The hog market, though, has been able to rebound a little bit. Do either of those, because with cotton is the bottom end, and in the hogs, are they the counter? I'm trying to find some positive here.
You would
Chris.
think
Can
so,
you figure out what I'm doing
yeah,
here?
Yeah, well, China is the biggest producer and end user of cotton. They like our cotton because we have the highest quality cotton in the world. A lot of the stuff they grow isn't as good. But it's really easy for them to sit on their hands and wait, which is what they've done. And that's why you see, cotton is just made a new 5-year low this week. If it takes out 60 cents, we're going to be back down to where we were. So I think that's going to be something we're going to have to look at ahead, because it is a smaller part of the economy, but it still impacts what happens in the southern part of this country. Are they going to plant more beans? Probably what's going to happen is somebody's going to say, why would I plant cotton at X if I can at least plant $11 beans and make a living? So you'll see guys make that decision, because I said it's a business. It's not, and some farmers are in a situation where they can hang on longer. They've got more assets and more weight. The people that are going to be the most stressed are going to be young guys who are borrowing money to put, and again, then it's just a business decision. So the positive part you mentioned about lean hogs have rallied with the entire protein complex, going up until they shut the government down. Managed Money had a record long bet. They were long 146,000. So you had kind of really good support level there. Long term, the lean hogs are at a really big support level here, around 78, 79 cents. If that holds, you may see another thing come in. And if we get I hate to say it, but if we get another big rush of inflation, that generally helps commodities, because then the financial community says, oh, we want to own things. So if you look back in the 70s, and you probably know more about it than I do, it was actually a help to the commodity economy, because when you had inflation.
Ernie, you get the last few seconds.
Well, inflation is more of a benefit to the agriculturally dependent areas of the country. And hold assets. Going forward, assets are the key. The fiat money, the dollar, other fiat monies, the yen and so on, they're taking dives. So holding on to assets, buying assets. And back to, I didn't answer your question well about the farmland. One of the reasons to buy farmland, it's an asset that's going to be there, and it's going to, in the long run, it will go up in price and will go up in value.
It's just one of those things that we have to sit through, maybe a little, I wouldn't call it maybe necessarily a recovery or an adjustment, but you're saying just real quick. All right, very good. I'll let you, I'm going to hold you on that because I got a couple more questions I need to get to you in a minute. Thank you, Ernie Goss. Good to see you. Chris Robinson, thank you very much.
Thank you.
Happy Thanksgiving to you both.
Turkey Day, we're here. We're always here on Turkey Day.
We appreciate that.
Turkey and football.
That's right.
Turkey and football.
Our own tradition. You have been watching the analysis segment, and in a moment, we are going to continue this discussion in an online-only segment. Search Market Plus with Chris Robinson and Ernie Goss wherever you get your podcast to hear that conversation, or go to our website at markettomarket.org. We want to make sure that you never miss any of our content when you subscribe to our YouTube channel at Market to Market. There are benefits of being there. When you turn on notifications, you'll be the front of the line for our stories, the Market Plus, as well as the MTOM podcast, especially this week when we recorded earlier than normal. Next week, farmers navigate changes to labor policy. Thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
I wouldn't be here without my customers.
Yeah, I'd like to thank the customers. They're very dear to our hearts.
It's about the people that you're working with and the relationships that you have.
Thank you.
Thank you. Thank you. Thank you from the bottom of my heart.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.